Hi, Assalamualaikum and good day to everyone. My name is NURIN binti Saad and I'm going to talk about business financial control. Uh, Financial controls are the procedures, policies, and means by which an organization monitors and controls the directions, allocation, and usage of its financial resources. Although your business may be based on an aesthetic vision or a personal idea, it will only be able to operate successfully if it is financially sound. Most businesses, oh, sorry. Most businesses passes through startup and growth periods, spending more than they earn. However, the long-term health of any company depends on ultimately earning more money than it spends. In addition, financially viable companies must manage cash flow effectively enough to avoid debilitating finance charges and have enough capital on hand to cover basic expenses. There are four ways to control your business financial. The first one is bookkeeping. Second one is financing. The third one is cash flow, and last but not least is budgeting. So I'm going to talk about bookkeeping first. So bookkeeping is the process of tracking companies' daily financial activities, such as sales and expenditures, and periodically compiling this information into reports, such as profit and loss statements and balance sheets. So you can see exactly where where business is spending money, where revenue is coming from, and which tax deduction will be able to claim. Bookkeeping is important because it helps you budget. When income and expenses are properly organized, it makes it easier to review financial resources and expenses. Why bookkeeping matters for your small business? The first one is because bookkeeping helps catch more tax deduction. When you record and categorize every transaction in your business, you will be able to see which expenses are tax deductible so that nothing falls through the cracks. Number two, bookkeeping helps get a business loan. If you are applying for a small business loan, banks are going to need to see financial statements. So you are going to need to have something that shows your expenses and revenue, otherwise known as an income statement. The third one is bookkeeping helps catch financial mistakes. You are keeping a close eye on the transaction in your business, which means you will be able to catch things like bank errors, invoicing mistakes, and paying somebody twice. Okay, we move to the second point, which is financing. Business financing can be a valuable tool that helps business grow and enables you to make ends meet during slow periods. However, business financing must be carefully managed to ensure that you make smart choices about credit options and make payments on schedule to avoid costly financial charges. There are a few tips for manage business financing. The first one is pay yourself. If you are running a small business, it can be easy to try and put everything into day-to-day operations. After all, that extra capital can often go a long way in helping your business grow. The second one is invest in growth. It is important to set aside money and look into growth opportunities. This can allow your business to thrive and move in a healthy financial direction. The third tip is spread out tax payment. If you have a trouble saving for your quarterly estimated tax payments, make it a monthly payment instead. That way, you can treat tax payments like any other monthly operating expenses. I move to the third point, which is cash flow. Cash flow simply refers to cash that a company has paid out or received. Cash flow is to find out how effective a business is in managing its cash and what it spent it on. And in the end, cash is the lifeblood of any business. If you can't pay your employees, your vendors, or even your taxes anymore, it's game over. Efficient financial control measures can contribute significantly to the cash flow maintenance of an organization. Sound financial management ensures that your company is able to meet day-to-day expenses, having enough product on hand to meet customer demand, having enough money to pay staff on time, and having enough capital ready when your business has the opportunity to grow. So I move to the last point, which is budgeting. Budgeting is the area of financial management that involves planning for typical and atypical expenses. It is the process of deciding the best time to make a particular purchase based on the amount of money your company is currently earning and your expectations about how much it will earn in the future. Sound budgeting is important because it enables your business to approach financial decisions with sound information and sufficient resources. Budgeting identifies current available capital, provides an estimate of expenditure, and anticipates incoming revenue. By referring to the budget, businesses can measure performance against expenditure and ensure that resources are available for initiatives that support business growth and development. It enables the business owner to concentrate on cash flow, reducing costs, improving profits, and increasing returns on investment. Budgeting is the basis for all business success. It helps with both planning and control of the finances of the business. If there is no control over spending, planning is futile. And if there is no planning, there are no business objectives to achieve. Budget is planned to control the finances of the business, ensure that the business can fund its current commitments, enable the business to meet its objectives and make confident financial decisions, and make sure that the business has money for future projects. Budgeting is a very widely used process in businesses, and the reason for this is that budgeting has a lot of different uses. So I have listed few uses of budget in business. So the first one is establish priorities and set targets, turn objectives into practical reality, assign responsibilities, allocate resources, forecast outcomes, and monitor performance. I think that's all from me. Thank you for paying attention.